Good morning, everybody. This is Damon Bond of Bond Realty Group, licensed real estate brokers in the state of Connecticut and New York. Hope everybody's doing well today. Today is Monday, February 24th, 2020. If you have any questions, you can always email me at dbond011@gmail.com. That is dbond011@gmail.com. Or you give me a call, 203-394 8123, 203-394-8123. Welcome to Real Talk, where we talk about real estate issues that may affect someone you know and love, or you yourself personally. All questions, all emails will be received, and feedback will be given. So thank you for joining us. Hope you are all having a wonderful day thus far. All right, so today I want to focus on the mortgage process. The mortgage process is very important. It's kind of like, because if you want to buy a property, you're going to need your finances in order, right? And let's face it, not a lot of people have $200,000 or $300,000 or $400,000 in cash, all right? So therefore, the overwhelming number of people will take out a mortgage for a property. And so, of course, the biggest thing is finding the right mortgage person who can facilitate this for you. So what I have over here on the board is I have several examples, okay? Or a couple examples, rather, not several. My apologies. Hope you can see this quite well. And that is an FHA mortgage versus a conventional mortgage. Now, contrary to popular belief, FHA, which stands for the Federal Housing Administration, is an arm of the federal government. They do not provide mortgages. What they'll do is they'll guarantee a mortgage just in case you default on a mortgage. But hopefully none of that will happen to you. While conventional mortgage is as that is conventional. All right. So what are some of the key differences over here? Well, for one thing, for FHA, it's 3.5% down payment. 3.5% down payment compared to 20% down payment on a conventional mortgage. All right, so 3.5% down payment is good, because if you take a property that's $100,000, that's going to be roughly $97,000. $97,000. You have the $97,000 is going to be your purchasing power. You put 3.5% down, all right, which is going to be roughly about $3,500. That's pretty good. For a $100,000 property, if you're going to put 20% down, that's $20,000. So you do the math, $3,500 versus $20,000. So a lot of people who can actually do conventional will choose to do FHA because they say, hey, listen, Damon, I don't want to be, cash poor and have a house. So that is a viable option, but it is possible. All right, only 3.5% down payment versus 20% down. Now, if you notice over here, sorry, get myself out the way, there's no PMI if you put down 20%. PMI stands for private mortgage insurance. So anytime you put down less than 20%, for a property, you have to pay PMI. Now, don't worry, whether you're doing FHA or you're doing conventional, which is 5%, anything above 5%, the PMI disappears over time. It just takes time, but eventually PMI will disappear and there'll be no more PMI. So once you build equity in the property, the PMI will disappear. So that's the first point. The second point is this. With FHA, you usually cannot, and there may be some exceptions, but usually for the most part, you cannot buy a cooperative with an FHA loan. And the reason why is because most co-ops require at least a minimum of 10% down payment. So usually you can't use that for co-ops, all right? With a conventional, pretty much you can purchase most properties. The operative word is most, all right? Pretty much you can purchase most properties. Point number 3, some condos you can't use FHA. And the reason why is because either the condo itself isn't FHA approved, and there's a whole process to be FHA approved condo association. It doesn't mean that the condo is bad. It could mean because there's more renters than owner ratio, all right? But however, the bank will usually do a spot check, questionnaire that the association fills out. So not all. Conventional, usually you could buy most condos. It doesn't apply for condos, all right? The point number 4, lower credit score. Now this is a big plus for some people. To do an FHA is usually a lower credit score threshold. Meaning what? Meaning that the credit score usually has to be the lowest minimum of 620, all right, compared to a higher credit threshold for a conventional mortgage, all right? Usually they want you to be, in the 700s or so. So that's good. Now, yes, there's a possibility some places, with some exceptions, will do a 580 credit score. But that's a few exceptions to that. If you've been on time with your payments, with your current landlord, and so forth and so on, all right? Point number 5, can be used, okay, for REO properties, all right? It can be used for REO properties if you do what's called an FHA 203K, which is typically called a rehab loan. But an FHA loan itself will not necessarily get you an REO property. It's the same thing for over here. Even if you have conventional, usually with some REO properties, they want cash or they want rehab loans, all right? So these are differences. Is one better than the other one? It all depends on how your pockets are. They're both very, very beneficial. Also, I want to say this as a stipulation. FHA is for first-time home borrowers. Now, what is the definition of a first-time home borrower? A definition of a first-time home borrower is someone who hasn't purchased their primary residence in the past 3 years. So so let's say you do an FHA one, and then let's say 10 years later you decide to take another mortgage. Yes, you could do FHA as well, because it's obviously you haven't bought anything in 3 years as a primary residence. You can't use FHA for investment properties. You can use it for conventional. You can use it for investment properties, but you cannot for for the other one, as I said before. So these are the things you should be aware of when you're shopping around for a mortgage. And like I said, you can see your mortgage broker will be able to compare for you what are the cons and what are the pros on your particular situation of doing an FHA versus a conventional mortgage. All right, and there is others out there as well, but these are the two biggest ones I want to talk about. There is a limit cap on how much you can borrow. I think in Fairfield County, if I'm not mistaken, the amount is $729,000. All right, it varies from county to county, so it's not a statewide thing. For New York, because there's 58 counties, there's 62 counties in New York State, so I forgot the number, but these are the things you want to do. So I hope that you found this information informative. I hope you found it helpful. If you have any questions, please, you can always email me at dbond011@gmail.com. That is dbond011@gmail.com, or you can always give me a call or text 203-394-8123, 203-394-8123. All right, so if you like it on Facebook, like it, share it, YouTube, and so forth, everything. So thank you for tuning in to Real Talk. This is Damon Bond, licensed real estate broker in the states of Connecticut and New York, a Bond Realty Group. Thank you. Have a wonderful day. Stay safe, stay warm, and be at peace. Good day.